Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money. Mark Hanf is off today. Our phone number is 888-912-1190. You're going to use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme, again, is miscellaneous trivia. Nam, you got a lot to talk about today. Go ahead. Take it away.
Yeah, there's just a lot to talk about because there's a lot going on in real estate and lending, which is our world here at Pacific Private Money. Gosh, it seems like every time I'm on the show we've just been talking about how busy things are, but it really literally has not let up. Yeah. And we're just seeing not only more loan volume, but our average loan request size
gone up, I bet.
Is gone up, and and if you're a buyer out there looking to buy a home right now, then you could probably not commiserate, but I'm sure you're seeing that as well. And I feel for home buyers today who are trying to get a home in this market because they're competing against here in the Bay Area, multiple offers, and you hear every week how homes are going X% above list price.
Yeah.
And it's not that sellers and listing agents are listing below market to create the demand. I think they're just pricing it where they see the market right now. And it's just the frenzy of people wanting to get into a home. Yeah. Interest rates are still super low, and so you can buy more home right now.
I wonder if part of it is with the expectation of interest rates to go up and inflation to go up.
Yeah.
Because all the COVID stuff, people seem to be kind of getting back somewhat to normal. And even if they think, okay, well, I may be working from home, but now my employer is going to ask me to come back to work. Do you think that's a big part of it, is the potential inflation?
Yeah, I think that's part of it. Look, in 10 years, we'll look back and know the answer. But, I have to assume there's a number of things that there's probably more qualified borrowers because in the last year, if you're a first-time home buyer, you've been sitting on, or even if you're not a first-time home buyer, might have been spending less because there was less to do. And so you didn't have as much of a commute, and you're sort of building a war chest and able to come into the market with the ability to afford more than you could pre-pandemic.
Yeah.
So there's that group, and then the low interest rates, like you're saying, and then people being afraid of missing out on these low interest rates and worried about inflation, and so it's kind of creating the storm of activity.
Well, that's the other thing, is that just the idea that people are understanding prices are going up. There's a frenzy out there. I got to catch the wave before it goes up. I mean, it's almost kind of weird, like Bitcoin kind of did that for a while.
Right. And you saw what Bitcoin did this week, or cryptocurrency in general.
It's gotten slammed. I guess China has decided, I bet they're going to come out with their own cryptocurrency, so they're kind of outlying certain
use ours. You have to use ours if you're a citizen. So no, it'll be interesting. I mean, all we can say is right now is what we see in front of us, and that's the activity is really hot. This past week we got 5 new bridge loan requests.
Wow!
But I'll tell you, the smallest one out of the 5 was $2.5 million.
Really?
And later when we talk about potential deal of the week, that's an even bigger bridge loan that we're thinking about making to a borrower. But it's just the prices are going up. There's fewer houses on the market. We'll get into a little bit of construction lending later. There's not as much housing inventory for new housing stock. So and we had, who was it, the chief economist or global economist for Wealthon 2 months ago, month and a half ago, and he was saying, for the next 2 quarters, we expect to see, a really, really robust economy, and that's really playing out. So it's going to be an interesting rest of 2021. I can't believe we're already almost done with half of May. But so here at Pacific Private Money, activity continues to be to be at all-time highs, and the bridge loan activity in particular, and construction being two of the biggest areas of opportunity for us.
And with the construction, you actually have a specialized fund just to handle construction.
So yeah, we have the North Star Construction Fund, or North Star Capital Fund, which has been in place since July of last year, and that's the average loan size in there is pretty high, around 2.5-3 million.
Yeah.
And yeah, it's geared towards ground up construction. Although the Pacific Private Money Fund has some construction loans in it as well.
Yes.
So, but the North Star Capital Fund is definitely dedicated to construction lending. It's run by Matt Cordes, Mark Hanf, and John Simons, and it's been received pretty well so far. We just can't grow it fast enough.
Wow.
So,
well, you're getting these big loan requests. I mean, it takes a lot of investor capital to fill that need.
Yeah. So we can't grow capital fast enough. In the next segment, we'll talk about the Pacific Freedom Fund,
okay,
and what that fund is designed for, and the yield it pays to investors, and we can compare and contrast those two.
All right. Yeah. When we come back, we're going to get into all those funds. We'll also talk about Deal of the Week. And then we also have an email for you about private rates and how they've changed over the past few years. We'll get your expertise take on that. All right. Here is our first trivia question. Again, we're talking just miscellaneous trivia here. Who was U.S. president when the stock market crashed in 1929? Which president was president? Okay. I know Mark's so funny. He always says Taft. I always vote for Taft. No, it was not Taft. Okay. Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate, which is worth, by the way, over $100. And now that the sun's starting to come out again, people should get their tan on. Their fake tan on before they get the real tan on. All right. First trivia question again is, who was U.S. president when the stock market crashed in 1929? Stay with us. You are listening to The Best of Investing with Edward Brown and Nam Phan of Pacific Private Money. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. First trivia question, who was U.S. president when the stock market crashed in 1929?
I don't know.
Herbert Hoover.
Herbert? Oh,
Herbert
okay.
Hoover, yes.
Wow, okay.
In fact, I think the unfortunate thing for him is I think he ended up getting kicked out of office when the next election came around, or didn't get reelected because of the Depression. And if I remember correctly, I think he wanted to let the banks fail and just say, hey, listen, just it'll all come out in the wash. And but FDR came in and said, no, we're not going to let that happen. Okay, don't quote me on that. I think that's
right. Well, what do you think would happen if he had let them fail?
There would have been a huge problem in the beginning, but then it probably would have worked itself out.
Yeah.
Because the problem is when you start doing too many bailouts, as we're kind of seeing now.
Yep.
People are not wanting to go to. Well, here you talk about this now. Apparently, a lot of employees are not choosing to, or who unemployed people are choosing on the lower end not to go back to work yet because they're still making more money or close to as much money watching Netflix every day and not working. And that's not a good place to be. So, when the government does too many handouts, unfortunately, the nature, human nature is, well, shoot, why should I work if I'm going to get paid, not to work, even if it's not as much?
Yeah. And no, there's talk and we're getting off topic, but I think it's a really interesting conversation is, they're talking about a living wage for people, a basic minimum income. And they've been experimenting with that in certain areas. And I don't know what that amount is, but I mean, that's really along the lines of what you're saying, where you're giving people money, whether they work or not. What's the incentive or driver to actually get out there and do more? Is it human nature to settle in and be comfortable, or to really push yourself? And
unfortunately, it's just too easy to say, if I don't work, I'm going to get paid X, but if I work really hard, I'm going to get paid X plus $1. yeah, no, you're not gonna do it. And
Sure.
unfortunately, that means production's going to go down, and
Yeah.
we start moving towards a socialist or Marxist system, and it's just not good, except for the
Yeah.
people who are in power who can pull the strings. And that's
Yeah.
why, one would hope that when it comes time to voting, assuming that we can have an honest election,
Yeah.
that people will realize we don't want people who, absolute power corrupts absolutely, right? And if you're going to get people who are going to be making a situation where it's like, oh, you guys don't have to do anything. Don't worry, the government will take care of you. Well, how does the government do that? Going to print more money? I mean, you'll
Right.
have runaway inflation. I mean, look what happened to Germany in the 30s.
Yeah. Yeah.
It got so bad in the 1930s in Germany that they had chalkboards to be able to change the price of bread and all that kind of stuff, literally on an hourly basis. It
Wow.
kept changing. And then one guy, I heard a story where this one guy who had accumulated a lot of, German marks at the time,
Hmm.
he was so despondent about how he could see things going that he spent his last, like, what the equivalent of $1 million just to take a train ride like around the city for X period of time, because it just gets so ridiculous.
Became unaffordable after that.
Yeah, yeah,
Wow.
and I mean, if you think about it, can you imagine? I mean, it's bad enough when we go to the gas pumps, and here in California,
Hmm.
you start seeing gas over $4.50, and it's like, why?
Yeah.
Why is that high?
Hmm. Hmm.
So it's just I don't know.
Yeah.
It gets a little discouraging, so to speak. Okay. We were talking about interest rates for a little bit and potentially going up.
Yeah.
Email comes in for you guys and says, how much have your private rates changed over the past few years?
Yeah. That's a good question. So, how much have the rates that we lend out at? I
Yeah,
suppose that's the
yeah,
question. How much are borrowers having to pay to get private money alternative
I believe that's the
financing
question. Uh-huh.
from Pacific Private Money and other private lenders? And it's an interesting question. If you look back at 10 years ago, private money rates were oftentimes north of 10%. So a
Yeah.
borrower who wanted to buy a home, whether to flip it or, well, most private money back then was for investors
Yes,
acquiring properties.
that's true.
And it wasn't unusual for them to pay 10, 11, 12% in California and even higher
Yeah.
outside of California. Um, Outside of California, it was not uncommon to have double-digit interest rates for private money loans, somewhere in the mid-teens. Um, Fast forward over the last 3 or 4 years, you're seeing the erosion of that rate. So essentially, the rate's going down, which is favorable for the borrowers, where they're getting hard money rates or alternative rates down to, from 10 to, on a first, we're talking about first lien position loan,
Yeah.
from 10s to 9s to 8s. And we've settled in generally in the 8s through 2019, 2020, 2021. You're starting to see rates go down into the 7s still,
Wow.
or for certain types of loans. Obviously, for a lot of the loans, investor loans, business purpose, fix and flip, you've seen that for a while now, but you're just starting to see it in general across many and most alternative loan types. Partly because hard money is not necessarily the same as it used to be. It used to be 10 years ago, somebody with really, really derogatory credit, and hard money lenders were the lender of last resort.
Yeah.
Now people use hard money who are very well qualified to get a bank loan. They're using hard money or private money because of speed.
Speed. Yeah.
We're now a legitimate plan B, largely because we can fund faster. But there's a lot of interest from investors in the alternative lending space because they see that kind of quality borrower
Uh-huh.
and scenario where they're thinking, this is not a hard money borrower, this is a hard money situation. Meaning somebody needs to close quickly, they need access to capital quickly, and they plan to pay off the loan very quickly. Banks aren't interested in short-term loans.
No.
So,
True.
so that's why they turn to private lenders, the borrowers do. And so to answer the question, rates are going down. What we do to try and keep rates up in terms of the returns to investors is we sell a lot of the loans that we fund to institutional capital, institutional buyers, and we keep a spread, and that spread comes back as income. If you're an investor in one of our funds, comes back as income to the fund, and that's shared with the investors, and that income helps boost the return. And the return in the Pacific Private Money Fund specifically, has maintained itself in the high or mid sevens. So
okay, all right. We're going to thank you very much. By the way, how do people get a hold of you?
they can give us a call, 415-883-2150, or they can email us at or go to our website, excuse me, which is www.pacificprivatemoney.com.
Very good. All right, here's our second trivia question, talking again about the 1920s. During what? Just gave the answer. So I'm going to have to shift this around. During the 1920s, what dance was considered, the dance craze? What was a specialized dance, the name of it? That's so funny. All right, stay with us. You're listening to The Best of Investing. Call 888-912-1190. During the 1920s, what was the dance craze called? All right, don't touch that dial. We'll be right back. Welcome back to The Best of Investing. I'm Edward Brown, along with Nam Phan. Our second trivia question. During the 1920s, what dance became all the craze?
Was it the swing?
No, there was the Charleston.
The Charleston.
The
okay.
Charleston, yes.
I'm way off. I'm sure I'm off by decades and decades.
No, the swing was, I think, the 40s, I think. So that's not too far off.
All right.
Trying to think what was in the 30s. I don't know. I'd have to get it know. That's a good question. Okay. All right. So Nam, if you could give us a deal of the week, people know we've been talking about generally, how Pacific Private Money, makes loans to people, but
sure.
Why would people come to you rather than a regular bank?
Yeah. So deal of the week, we were talking in the first segment, I think, about just the volume of business that we're seeing, specifically bridge loans. The last segment, we were talking about their hard money situations and not hard money borrowers, meaning that the borrowers are well qualified for bank financing, but they choose not to go to the bank because either they don't have enough time. We know right now banks are so busy with refis and purchase because of low interest rates that it's often taking 45, 60 days to get a loan. So this deal of the week is one that we're currently looking at. It's actually a $5 million bridge loan.
Wow.
Against a $7 million property. So the borrower is coming in with $2 million. Very, very successful borrower. But, he owns multiple properties free and clear. They're total, $10 million.
Oh.
So this person could definitely get a bank loan. But they're competing against all cash in a very hot market. So, if they go to the bank, they probably this person probably could qualify for 2 mortgages. But again, it's a speed thing, getting qualified and getting a loan closed. And
are you crossing?
Yes.
Okay, so I was just saying, because otherwise you go, well, 7 million or 5 million on 7, that's like 70% loan to value. Yeah. And I know you guys usually try to keep it more conservative. So what you're doing is you're going to get you're going to use as additional collateral one or more of his other properties. So what's your loan to value actually going to be?
It could be really low. It depends on which ones we cross.
Yeah.
But we're in a really, really good spot having that kind of collateral.
Yeah.
For this loan. And again, he doesn't want to take out a bank loan because it's going to take long. Yeah. Plus, these days, if you're writing an offer with asking for a 60-day close, probably not going to happen.
No.
So that's the deal of the week for this one. But just other deals that we're seeing. We're seeing a lot of construction loan requests. The builders out there see a huge opportunity. Now, the challenge right now for builders is the cost of materials.
Yeah, it's gone way up. Also, in Marin, they just are talking about not giving out too many permits because of water with the drought. So that's another issue that is going to kind of slow the the supply of
Activity.
housing.
Right,
Yeah,
right.
yeah.
So there's got to be a solution for that somewhere, but we're in what is this, the second year, third year of a drought? And so
Second.
in the Marin, you've seen cycles or Bay Area, California, whatever, cycles where, maybe it's another year of this before we start seeing the El Nino come back.
Oh,
But,
yeah.
during that time it's not helpful if you can't get a permit because of water issues. So yeah, there's a lot of construction activity out there. As I mentioned, the cost of materials has gone up. So, if we get a loan scenario from a builder, some of the things we have to evaluate is, how um, how qualified is this builder,
Yeah.
or how is their setup? Do they own the whole process from start to finish? Because the builders who are going to be successful and profitable in this market are ones who probably have an end-to-end operation. Certainly the cost of materials are going to be a factor, but if you don't have to sub out as much of your work, and you have your own crew, then that will help keep the costs down.
Sure.
There's a movement towards alternative materials.
Oh,
and then there's builders who are coming into the market, like we've talked to a group from Canada that they're not building modular homes, but they're having part of the production occur in facilities.
I like that.
Yeah, so that they're just shipping out a completed wall, for instance.
Yeah.
And again, it's not modular, but it is, it's not building on site and being subject to weather. It's building inside a factory and bringing the finished, section of a home
Mm-hmm.
to the site, to the job site, to the construction site, and that's a creative way of helping to keep some of the costs down, and not be subject to delays from weather or what have you. But I'd be curious to see how much cost savings that is. But certainly, if you can do it in a factory, and the factory is close enough that the shipping isn't, too costly, then that can be a model. And this group's out of Canada, and we're talking to them right now, and hopefully that's something that we can provide financing to them, and they're able to build homes a little bit more affordably. So I think you're going to see a lot of evolution in the construction space in the coming months and years, where new materials will come out. People will get creative in terms of construction logistics, because I don't think these raw material costs are going to go down anytime soon.
No, I don't think so.
Yeah, and some builders are having communities are having escalation clauses, where if their costs of materials goes up, then the value of the property and the sale price is going to go up to offset that cost. So
for the buyer of the owner builder, so to speak.
Yeah, and some are easing back. Some community builders are easing back on production because the supply is limited and the costs are so high. So there's opportunities. It's for home buyers. It's going to be reflected though in a higher price.
And you're not quite seeing the exodus of California that everyone talks about.
No, it's really not as big as people are thinking.
No. All right. When we come back, you're going to explain about the Freedom Fund, the liquidity of it, the rate of return, and how investors can partake in it, because it's a very good fund.
Yep.
All right. Here's our third trivia question. What was the name of the sect that was raided by the FBI in Waco, Texas in 1993?
All right.
That's our trivia question. That one, I didn't mess that up. Last time I almost messed up the question. This time I got it right. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Again, here's the question. What was the name of the sect that was raided by the FBI in Waco, Texas in 1993? Don't touch that dial. The Best of Investing is going to be right back. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. Third trivia question. What was the name of the sect that was raided by the FBI in Waco, Texas in 1993?
Davidians?
Branch Davidians, yes.
Branch
Give me
Davidians.
credit for that. Very good. David Koresh. So, Nam, explain the Freedom Fund.
Sure.
What is that?
So the Pacific Freedom Fund is a fund somewhat similar to the Pacific Private Money Fund, which is our legacy fund. It's one we've talked about for years now on the show. But it wasn't until last year that we launched our second fund, and since then we've added two more, the North Star Capital Fund and the Pacific Southwest Note Fund. They're all unique in various ways, but the Pacific Freedom Fund is unique in that it's, for us, Pacific Private Money, we use it as a quasi-warehouse line, where we fund loans that we expect to and anticipate selling to institutional buyers. So we have a number of banks that like the loans that we originate here at Pacific Private Money and want to purchase them after we've funded them. So to do that, though, and to do it in the volume that they're requesting, so anywhere from 15 to 20 million a month, we can't do that just with idle capital in the, like for instance, in the Pacific Private Money Fund, because the Pacific Private Money Fund by design is not meant to be highly liquid. We keep a few million in the account to fund new loans or to process redemptions, what have you, but it's not enough to fund 15, 20 million a month. So the Freedom Fund we launched essentially April of last year, and we used those funds to fund loans that we plan to sell within the next 2 weeks to 30 days. And that cadence has been exactly that over the last year. We sell tranches of loans twice a month out of the Freedom Fund. And so the fund goes from being close to fully deployed to being completely liquid, or not being completely liquid, but being close to liquid twice a month. And for investors, the appeal is that there's you can have access to your capital back pretty quickly. And what we found is investors who have in the past liked investing in trust deeds, but are often get paid off and are sitting on that capital, earning 0.5% in the bank, say, okay, well, I can park it in the Pacific Freedom Fund, and if I need it within 30 days, I can get it back. And because we sell these loans, we're back in cash twice a month, and we can process those redemptions. So, for instance, we had one, 500,000 redemption request last month that we were able to process in a week. And so the Freedom Fund is meant to, provide that liquidity for those investors and give us the capital we need to fund loans that we're then selling to institutional buyers. Should note that the interest rate that investors can earn is 6%. It's fixed 6%, and that's multitudes better or magnitudes better than what you'd earn having it sit in a checking account, waiting for the next trust deed opportunity or whatever investment opportunity comes up. So, it's a great way to park your money for a short period of time. People pull back from the stock market, take some money off the table. They parked it in the Freedom Fund looking for the next opportunity. Maybe it's Bitcoin, who knows? And then they invest or they request a redemption and they make their next investment.
And there's no fee to get in?
Correct. Just like the Pacific Private Money Fund, there's no fee to get in, and there's no fee for redemption.
Okay.
But
the thing is, it's not open to everybody, though.
Right. So
right?
You do have to be accredited, just like all of our other funds, and the minimum investment is $250,000.
Okay.
So $250,000, 6% rate of return, and redemptions can happen within 2 to 4 weeks typically. And again, we use it to fund loans that we plan to sell to institutional capital. There may be a few loans. Sometimes we'll get a bridge loan that we won't sell to institutional capital because it's a 30-day hold. And we'll hold that loan in the Freedom Fund because it's going to pay off shortly. Yeah. Again, it goes back to, that bridge loan borrower who wants to make an offer and they haven't sold their departing residence yet, and they need our bridge loan to close. We've been paid off on our bridge loan in as little as 10 days before.
Yeah. I mean, I could see that somebody, a borrower, gets a loan from you and at the same time is already working with a bank at the same time to refinance it out. And as soon as they do, you get paid off. Yeah,
most are already in the middle of some sort of financing piece, but it's just taking longer. Yeah. Or they know that if with a conventional lender, there's going to be a financing contingency. So they get a bridge loan from us, and we deliver sort of certainty of performance, and so they can make a non-sale contingent offer. And that's been worked so well for many borrowers. And in fact, one of our loan agents had 3 borrowers who were pre-approved for our bridge loan that made an offer on the same property. And they were competing against 7 other borrowers, and I think in this case one of them won out. So so bridge loans, if whether it's through us or somebody else, if you're in this marketplace trying to make an offer and win, and you have a sale contingency, oftentimes you're competing against 20 to 30% of the other offers being all cash.
Well, and especially if here's the funny thing is that sometimes you can actually make even a more aggressive offer if you're going to be able to close a deal in 10 days or so. So
right.
It actually more than pays for the cost of getting your loan, and then having to get, another bank loan at some point.
Yes, exactly. And, if you're going to make an offer, it's your listing or your agent's job is to try and find out as much information about the seller and the listing as possible. And, that seller could be the buyer of another property.
Yeah.
Of course, right? They're moving somewhere else. They may be under a really tight timeline to close. You
might end up doing 2 loans for the same transaction, one for the new buyer,
Yeah, or even if you aren't doing 2 loans and that seller needs to close quick because they have 10 days to get in to close on the property that they're buying.
Yeah.
Maybe you can make an offer where it's like, we'll close. I don't want to say come to us and we'll close in 10 days. I'm not saying that because you have to follow various guidelines. But if you know that the seller needs to close, rather quickly, you might have some leverage in making not only an aggressive offer in terms of closing time frame, but maybe it doesn't have to be at full price. Now, I'm not saying do that. Talk to your realtor.
Sure.
But your realtor's job is to really find out, strategically how to position yourself for when you're making an offer.
I do know of a situation where the buyer put an offer of $75,000 under asking, even though there was going to be bids of at least asking or more on a piece of property, because they said, hey, we're going to go and get Pacific Private Money to lend us the money in 9 days.
Yeah.
The reason they were able to do it that fast is because they had already had a complete bank file ready to go. So they just had to, quickly open up escrow for the financing, and they were done.
Wow.
Right. Give out your information one more time, and then we don't have a trivia question, but we will have some closing comments in the next segment.
Sure. So you can contact us at pacificprivatemoney.com. That's www.pacificprivatemoney.com. Or you can give us a call, 415-883-2150. That number again is 415-883-2150.
All right, stay with us. The Best of Investing. We'll be right back with some closing comments. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. Nam, take it away.
Yeah, so, last segment we were just talking about, and in the prior ones, we were just talking about how hot this real estate market is. And I love talking when Patty's on the show. I love talking to her about it too, because she's right at the forefront of it. Yeah. But, I was attending a online conference yesterday on real estate. And, one of the things, if you're a home buyer out there, you're just seeing a lot of different models out there about like real estate companies that will buy your next home for you. Yeah. And then rent it back to you until you've sold your home. And then once you sell your home, then you'll have the cash to buy the home from that real estate company. And they're all promoting this buy before sell program and how convenient it is.
Yeah.
But, that's actually much more complicated than just getting a bridge loan.
Yeah.
Because if you have a real estate company buying a house for you, essentially they're making an all cash offer sort of on your behalf, but then they're going to rent it to you. So you have to sign a temporary lease agreement with them. And then they, want to list your home for you so that they can, capture the commission on that. And then they're going to sell the home that you're renting from them to you. Yeah. And you have the proceeds from the sale of your home to do that. And then maybe you'll get a loan from them as well. I mean, that is convenient to a point.
A little incestuous, but yeah.
But you have so much more flexibility with a bridge loan to sort of drive, you know, have control. And so with a bridge loan, you get right in. You're the owner of the new home. Um, you're not having to rent from anyone, and you can move in on your time frame. So a lot of people have used our bridge loan not only to get the property, um, but in some cases we can lend, uh, above what your actual loan amount is for the house, because some of those proceeds can be used to make updates to the home you're moving into. So that, keep in mind, you're still living in your current home, and you win that offer, you close escrow. Hey, if you don't have to move into your new next home yet, just take the time to update it, do those changes that you want to make, and then move into it. And then now your departing residence, the one you were living in for however many years, is empty, and you can do some freshening up. And when you freshen up the property and stage it, that's what buyers want. They want a turnkey home today, and they're willing to pay for that. And you can oftentimes get a higher sales price for a properly staged home with the latest updates that are attractive for today's trends. And when you have that, you can recoup a lot of the cost of bridge loans. And
Sure.
and if you go through one of those buy before sell real estate companies, what I understand is that you may be on the hook for some of the transfer taxes and paying them twice because there's two transfers going on.
Oh, that's a good point.
So some things to look at.
Expensive, yeah.
But can't promote that enough that a bridge loan is such a convenient way to compete in today's market and give you the flexibility and control you need to really freshen up the home you're moving into or the one you're leaving. And also, you only have to move once. So again, 415-883-2150. Go to our website, www.pacificprivatemoney.com. Probably on our next show, we'll talk about a date for the next webinar, which will be focused on the Freedom Fund.
Very good. All right. Are you ready for our thoughts for the day?
Love the thoughts for the day.
Okay. Little thoughts, little puns. All right. What did the man say to the wall? One more crack like that and I'll plaster you. Thought that was pretty cute. And I don't understand why my credit is so bad. I get letters from all my creditors each month telling me my balance is outstanding. I like that one too.
Get these, Edward.
I wish I could say I make them up, but I don't. I find them on the internet.
That's
and
fine.
It's true because I found them on the internet.
Yeah.
All right. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
So long.